All right, so real estate investors, business owners, how do you value a commercial property? So there's three major ways to evaluate a property. So I was talking to a real estate investor today. We actually were texting back and forth, and what one of the things they were looking at doing is cash out on the property so they can pay off some other high interest loans, some MCA loans, and so forth. And he was asking me, based on the value, and we were able to, with this underwriter, allow him to be able to uh, use his own appraiser. And this appraiser was giving him some, information on, the methods on how they're evaluating the property. And they were using this one method, and he was asking me if that method is going to work, to cash out. And I was saying, well, usually the appraiser will use these three different methods to evaluate a property. And so let's go over those three. So number one is the income method, or it's also known as the income capitalization approach. And so what happens is, so this estimates the property's value based on its income potential, and it considers the net operating income that's generated by the property. And the formula works like this. So the the NOI, which is divided by the capitalization rate, will equal the property value. Just so we're on the same page, the NOI, the net operating income, is the property's annual income after deducting the operating expenses, and that's how it works. So the the income of this property minus the total expenses, that's how you get the NOI, right? So the cap rate, or capitalization rate, is the expected rate of return for investors. So that rate of return can be different actually in different markets. So so that cap rate. So that's number one. All right. Number two is the comparison method, or the sales comparison approach. And a lot of people say comps. And this approach compares the subject property to recent sold comparable properties in the same area. And by analyzing market data, what you can do is you can estimate the property's value based on similar transactions. And so that's, and just a little bit more on that. So when you compare two properties that sold, right? One, if you have a multifamily property, definitely you want to compare it to another multifamily property, or multiple multifamily properties, not like a industrial property, or another property like that, which you want the same likeness. All right. So number three, the cost method. And this method calculates the property's value by considering the cost to replace it with similar property. And what this does is it accounts for construction costs, land value, and depreciation. All right. And so, how much it's going to cost to, repair, I mean, to not repair this, but construct this property, or put this property back, plus the back, buying that land and everything. That's the cost method, right? All right. So again, an appraiser, um, a good appraiser is typically going to use like all those three methods, and usually are listed on the report to make a determination on the overall value. And sometimes they'll just, based on those trees, they'll say, hey, um, maybe they'll take the median or the average, whatever, just to say, okay, well, hey, here's the true value of this asset. All right, well, hey, thanks for watching. Definitely, if you have a deal, we'll look forward to helping you with it, or just follow us for more information.